All right, so welcome to our live class. Today we would first start with some recap of what we have been learning, and from there we would start explanation on my trading strategy, what I call flat FX trading rate. So without wasting much time, let's start. So the first basic stuff I would like to talk about is uh market structure. Yes, so by now you should understand how to market structure. Then we have a low, and you can see here, starting from here, we had a shift from a downtrend to an uptrend. So from here, we have this range from this low to this high, and you can see what price. Okay. Right, okay, no problem. Yeah, so you can pretty much see what price is doing within this range here. And you can see as price was moving around this area, never broke the low or high. So we have this range from this low to this high. And you can see price was just moving around this range before price pushed to break the high. So when price broke the high, we had the new high here. It was when the new high was created. So everything inside of here is just internal structure, which I told you about. So as I was saying, everything that happened inside of here is just internal liquidity. And this was when price finally broke the highs, and you can see the story continues. Price continues to break highs because when the high was broken. And here, this was the last low before price finally took out that low here. And as price took out that low, we had range from this high, this low, and you can see price created another low here. And here, price has failed to create a new low here. This is the storyline of what price has been doing in structure. So, like I told you, inside our structure, we also have what we call our internal structure. So, your internal structure, funny enough, the internal structure is also a structure on a higher time frame. Yeah. So if you go to your smaller time frame, like your 30 minutes, 15 minutes, and you look at your internal structure, so all through here, this phase here is our internal structure. So there are things to note. Inside your internal structure, we also have setups that we can trade to anticipate the next expansion leg. So remember what I was telling you about expansion and contraction. So yeah, in the market we have two different things that is happening in the market. It's either the market is trending or the market is ranging. So another word for our trending is our expansion, and another word for our ranging is our contraction. Yes. So whenever a new trend or a new expansion is created, you have to expect a range. So it's very clear. Whenever you get a new break of structure, you expect some range in the market, and it's after that your range that you get your next expansion leg. So we are to trade our range or contraction. We are to trade that phase in order to predict the next expansion leg or the next trend. So if you go to your smaller time frame, like I said, 30, 15 minutes, you notice something, what I call your read. So you can see here in the chart, before the market created this break of structure to the downside, you can see price was busy taking out highs, took out highs here, took out this high and this high. So this was the first low that was broken, and we had zones. We had zones here. We had this zone here, and you can see it. Price tapped into this zone. Yeah, we respected the zone, and you can see it pushed to the downside. So you can see it even inside here. We have some contraction phases, which is here, shift of this low, price coming to this zone here. You can see this high was still respected even up to here, and price pushed to the downside, as you can see. So it's something that is very clear. You have this was the last low here in our contraction phase. That was so this was when we had a change of character to the downside, and price came back to another block here, as you can see, and tested as level, and we had price pushing to the downside. So you can see price doing this continuously. So most times you have some bigger contraction. Okay, so when price shifted to a downtrend, so all through here, this was when we are in an uptrend. So there's this pattern you should always spot, like where you want to trade this. So what is the pattern? So in an uptrend like this, you first have price taking out a low like this. Price took out this low and push to take to break the highs. So here, where are your zones? You have this zone here, this zone. I see price respected this zone, even though it touched it more than once. So after that, I see predicted our next expansion leg to the upside. Same thing here. You can see this thing playing out. Before this expansion leg happened, you can see what played out here. But I think this was the first low, swept this low, broke this high, and return to this other block here. So after that, you can see it, expansion led to the upside. You can see it. This is very, very simple. There's nothing technical here. So using this, like I said, we are able to predict the next expansion leg. And if we are trading this, we can trade it to previous levels. So you can mute your mic. I don't know, there's noise in your background. You can trade it to previous levels. By previous levels, I mean if you scroll to your back, you have these highs here. Okay, let's never even go to these highs. So these are levels that you can target as your take profit, or you can use a fixed RR, that's a risk to reward when trading. Like you can target to, yeah, 2:5. You know how to calculate your risk is your reward now. Okay, yeah, that's nice. So that's it. That's it on your market structure. So I just taught you a trading strategy that you can apply on the chart. This is just like understanding market structure solely. And the last thing you should note is your candlestick behaviors. So, like I told you about your expansion and contraction, like whenever you're on the chart, you should note when the candles are showing sign of weakness. Like what I mean by sign of weakness is when you are having like candlestick finding it hard to move in a particular direction. So let's take here for example. Now here, look at when this sell started. You can see the massive candles pushing downward, but then you can see it when the market got to this low. You can see this first rejection red candle, the second rejection that closed in a bullish candle, then this next bullish candle, which was very strong. And after that, although we still have some sellers trying to come into the market, but then after this final sell rejection, I see price pushing to the upside. So understanding this, and note that this is also on your 4 hour. So like if you are checking your candlestick patterns on your higher time frame, it's going to really save you a lot of time and money, because like candlestick patterns on higher time frame is very, very powerful. Yeah, because this is 4 hour. Imagine for 4 hours, like competition between buyers and sellers. Buyers and sellers trading, 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 and then buyers, or let me see, sellers are in control. So the way you know when buyers and sellers are in control is the way your candlesticks are behaving, like your rejection, engulfing. You know about your engulfing candlestick, right? Yes. Yes, yeah, yeah, yeah. That's right. Yes. So whenever you get your engulfing, it's showing you power, like strength coming into the market. So just understanding these concepts alone, you have your strategy. So like what I do here, you mark your structure on the 4 hour first. Then after that, you understand the phase you are in. So whenever you are in a trending phase, you have to wait for the next contraction phase to step in. So it is in that contraction phase, that's when you look to trade to predict the next expansion leg. Yes, like they always say, the trend will not always continue. So there is open look for reversals. So whenever you are trading, you should also expect that. So in your contraction phase, you might get a reversal trade, like maybe get a raid, break of structure in the opposite direction. So you can ride it. And you know that reversal trades are more stronger. Like whenever you get a change of character, you can ride it for a long time. Like see when this change of character happened here after the last break of the downside. We had buyers stepping in. I can see market buy up until this point. I I can see the difference, like starting from the bottom. I see we have massive buys, but then the buys started reducing before sales came in. But then it's still the same thing. The sellers, the sell, like see how price is breaking structure to the downside. It's not really strong compared to this other side. But then I might say that it's because like we are in during like we are close to the end of the year. Maybe that's why price is not really showing strength in price movement. But then that's just it. So we are to note all these things. So the last concept I would like you to go and research on is your ADR, what they call ADR as average daily range. Yes, the average daily range. So I've told you this thing before. I don't know if you can remember. Like different pairs have the amount of pips. Like it's just like a range that they can do for a day. Like I've told you, like gold can do like 200 pips in a day. GU can do lesser, maybe 80 pips around that figure. So understanding this ADR will help you understand like when to hold and when to close trade. So let me say if you are trading and let me say you get your trade and you can see for that day you have gotten like let me say 80 pips, is like enough because the market might not continue to push in your direction. You understand? So understanding that will help you know what to target. So even when you are trading, you can say, okay, I'm expecting 50 pips from GU because you are sure that based on your average daily range, like GU can provide that for you. So I don't know if you're understanding or you have any question. Can you hear me?